Hey everybody, good afternoon and welcome to 12-Minute Trading. My name's Doc Severson. I'm joined with Dave Lukas here, who is back from New Zealand and his Ironman session. Dave, I wonder if you could do the haka for us, if you learned that while you were down there.
I got to see some live haka and everything while I was there. It's pretty interesting stuff. So actually, you can see it if you ever like go Google like New Zealand Parliament where they like all got angry
Oh,
and did the haka
yeah.
in Parliament. It's killer.
I
So
would I would love to see our Congress do the haka. Like, you know.
it's like a tribal war dance.
Yeah, no kidding. So we've had a little bit
So
of since we last talked to everybody.
yeah,
We were pre FOMC when I was
right.
talking to everybody last week. So range contraction led to range expansion, and it
Mhm.
led to the downside. So we did get a big downside
Yep.
move, kind of as we expected. I mean, I don't want to ever get to the point of saying, well, I knew that was going to happen, but it's
Right.
like lately what we've seen is every time we consolidate and wind up the spring for the market, we end up going down first and then slingshot off of there. Now, if
I
this
knew something was
changes,
going to happen because I was traveling.
yeah,
So there was
that's
no
true.
way that the market wasn't going to act up during that time. I told all my students now it waited till like the last couple days of my travels to act up, but it did in standard fashion for when I travel. So I was glad to, I really didn't have any positions on, really, wasn't trading and had cleared most everything before leaving. So I got to kind of sit across the pond from afar and just watch it kind of go down. But I'll tell you, I that happened and Fun Strats Tom Lee came out and said it's time to back up the truck, because the fundamentals haven't changed. And so I thought that was interesting. We've had a little bit of a rebound from there. Obviously, today it started off really kind of a weird session today, and that makes sense. Low volume week ahead of a holiday, that sort of thing. But I would expect though we're going to get the Santa Claus rally. We're going to continue to rally from here. I don't know by how much, but we'll probably see some rallying into the year end and everything from here at this point.
You know, one of the things that I told my folks in the live room this morning was, because we sort of walked through the first 45 minutes of the market day, and I said, hey guys, we're in a corrective move right now. And that got started 2 weeks ago when we started to see reversal days. So every day
Right,
we would go higher in the morning and then we'd close lower. And so
right,
what that is that this is, for those of you out there, this is a way for the smart money to slowly sneak out the back door, because
hmm
they don't want to just go dump 5 million shares of whatever they're holding. They want to just slowly, and so what they're doing is they're trying to, they'll basically push it up to sell into retail, and then they'll kind of back out the door, and they do that, and so they do leave these tracks. And so we did see that the last couple of weeks. It's like, this is what we're seeing. We're seeing the beginning of a little bit of a corrective price movement, and ultimately, a lot of times these things will dump to the downside.
yeah,
And so now what we got to figure out is, when is this over? And there's a lot of ways. I
hmm
mean, we'll show some techniques here in a minute. There's a lot of ways that we can determine, like, okay, is this over? Is the coast clear? And a lot of times, most retail traders, by the time they feel comfortable with it, it's almost too late. They've waited too
right.
long for the rally. So that's going to be important to see what's happening, especially if you're an option seller and you want to take advantage of these
Of
conditions.
the volatility.
Oh, I'm sorry, guys. It's been a while since I've done this. I got to crank Dave up here.
Oh, sound.
Yeah, we got the, I always forget every time we haven't done this for a
How
while.
how is that, guys? Am I sounding better for you?
Yeah, that should be a lot better for everybody.
Excellent. All right. So didn't miss much. I just said it was interesting to watch things while I traveled overseas and all of that. And market acted up on cue as I typically does when I travel, but I was pretty much to cash, so I got to kind of just be a spectator of this. And now I think we will see things continue to rally into year end. A little bit of that Santa Claus. I don't know if we'll make it. up to new highs again. It's not that far away, to be honest, about 100 points, a little over. So I could see that happening maybe next week if they want to push it up. My biggest thing is what happens when we flip to January. I've been saying it forever. I thought they would run this market up into the end of the year. And then as we get into January, things change. First quarter is usually more volatile, but this year is going to be interesting because we've got the new, obviously Trump's taken over office, going to start instituting a lot more things. If we start bringing fiscal responsibility back to the United States, which we need to do, how does that start to impact how the market approaches the future, right? Remember, the market's a forward-looking instrument, it's trading on the future. Why did the market dump after the Fed? It's trading on the fact that the Fed is, coming out more hawkish for the future, saying, "Hey, we don't think inflation is going to come down as much. We don't have to lower rates as much. We're not going to." And so that market reacted right on what it expects the future to be. So that's, I think, as we get into January, I think the first week or two in January is fine. I think we're going to continue to be there, but as we get to the back half of January, the market's going to start trading and positioning itself for what it thinks is going to happen over the next 6 to 8 months, and that's where I think we could start to see corrective action. We could start to see some of that stuff come into play.
If you go back and look at some of the outstanding years that we've had in the last decade or so. So one of those was 2013. 2013 was, again, I don't know the numbers off the top of my head. I just know it was an outstanding year. Basically went up all year long. And so we got into 2014, and guess what? It kept on going. And it pretty much topped out at the end of the year. And then we had 2 years of sideways after that into the election. So there's that. The next year that we saw, which was outstanding, was actually 2017, which was Trump's first year of his first, administration. Yep. And then what's interesting is that we had an outstanding year, and as it got to the end of 2017 and transitioned into 2018, everybody was the majority opinion was, well, this thing's going to crash right now because this is way too far. It spent the entire month of January ripping to the upside before it then crashed. Then we did get a full 10% correction, and the entire year of 2018 was a mess, which I wonder if we're going to see something similar to that.
And again, it's going to be how the market starts to price in the changes that Trump makes. And it's also going to be how good Trump is at mitigating some of these risks. Guys, think about it this way. The U.S. GDP, the positive GDP that we've had, really has come from $2 trillion plus a year of deficit spending. So $2 trillion of debt every year, that's, if you take that out, if you take that spending out, our GDP is negative. So if Trump starts to, with Doge and everything else, starts to really come down and, big reductions in that, and they move quick, then it becomes like, how do they balance that with somewhere else in the economy? Like, can they move fast on tax cuts or, do things, that will help mitigate some of that and cause some growth? Right, because growth is what gets you out of it. Right, you got to have positive growth, and you got to have a growing economy. So if they are going to reduce the spending, how do they accomplish the growth? And that's what I think the market's going to have some challenge deciphering, and that's why I think you're gonna see some of that volatility. We may go nowhere for a few months, right? But we may have some wild swings up and down where we do that, and that's that's pretty normal market behavior. So, I mean, if you look at the beginning of each year, January into February typically has some volatility into it. So, I mean, based on past performance and past behavior, I just think that we could see that.
That's true. I'll tell you what, I'm gonna bring up the weekly chart of the S&P, and this is your favorite view of this. And I was asking Dave before, like, how will we know if this is just another, is this just another pullback, which is going to lead to a slingshot higher? Here's a pullback slingshot. We've seen these like literally all year long. Pullback slingshot. So what delineates this one? Is this going to be the same thing again, or are we going to see something where it jumps up to a lower high this week, and then starts this process.
Hmm.
So that's
I
what
think
we have to figure out.
as of now, we have to just go with what the trend has been. My biggest thing is the weekly chart. If you throw the Bollinger Bands with the 20 period moving average on there, that to me, and I've said it before, that to me has really been a great telltale sign. If you break through that 20 period moving average and you can't get back above it, that typically signals a change in character to the downside in a bigger way. But for now, it continues to hold, and it's held pretty well.
So right now I show that you should be seeing that on the chart. It's at
Yeah,
58.10,
yeah,
58.09 or so, which is
yep.
that's 160 points below where we are right now. So that's quite a. So the other thing that we can do for those of you out there trying to figure this out, what we can do is we can throw the fibs on here. Let's go with a different chart to do this. And this I find to be useful because what it does is it gives me a little bit of framework to understand what's going on here. So when we see a correction of any type, so this is a correction, not this is corrective behavior. Let me say it that way. It's not a full correction. A full correction would be about 10%, would be somewhere down in this area. But typically on any kind of corrective behavior that includes these distribution days and stuff like that, what we're going to see is we're going to see eventually a bounce at one of the fib retracements, either 38.2, 50%, which we just touched today, or maybe as high as 61.8. And then if the price is able to get above and beyond that, which is about 6,000, so Hoffman family is saying that 60.55 may be a target for later on.
The JPM collar.
Yeah. So if the price is able to get above 6,000, then we're probably free and clear into the end of the year. It's probably going to fill in the triangle. Okay, so 6,000 is your key. If we're able to see the price close above 6,000, we may have a shot. Now, here's something else. This is a twist that I see all the time. So let's say the price bounces up to 6,000. What you have to watch out for is the scary lower high. The scary lower high shows up because if you look at this, there's a high, and if we set up a high here, this could be a lower high, and that's a change in polarity to a downtrend. And so these always come really, really fast because what happens is everybody jumps on board and says, okay, here's the bull train, here's the pullback, let's jump on board. And so it creates a massive a bull trap. So that's something to be aware of. But what often happens is we'll bounce up to one of these fib retracements, and then intraday will start pulling back like crazy. And everybody says, oh no, it's the lower high setting up, and let's go short. And then what happens is by the end of the day, or perhaps the next day, what happens is we get this kind of a move. So it sets the hook and creates a bear trap in the middle of this move. So I see this all the time. So I'm anticipating seeing that maybe within the next few days or so here. We could see something like that happen. And if that does happen, if we set up like this is actually an ABC pattern like this, A, B, C, like that, or 1, 2, 3 pattern, you can also call it. So 1, 2, 3, once we get above that level, then you're home clear. And you can probably set up a nice directional trade for something like that. Guys, if there's any other questions, let us know. We're going to be here for another maybe 10, 15 minutes or so, depending on Dave's voice.
Yeah, I think, I lost a little bit on the way. But I think the biggest thing to watch, though, is really, let's say we finish out this week, see if we can get some continuation, right? And get over that 6,000 mark. I don't know if we'll hit it this week. It'd probably be next week. the way things will pan out. But Thursday, Friday could be, again, you get these low volume weeks. You see this like even during Thanksgiving week where you get these big moves, that just come out of nowhere, like the S&P up 40, 50 points,
Yeah.
and it just happens. And there's really nobody trading. It's the algos and stuff. So tomorrow will be what Doc affectionately calls a swivel chair day, if they're even there still, where they make a trade in the morning and they're out, right? They swivel their chair and head out. And then, Thursday and Friday will be more algos. So natural bias is up. The uptrend is still currently intact. We've just put in, if anything, we put in a higher low. So there hasn't been any real change in larger market character that tells me we're not, continuing this trend upward, at least for the short term.
I'm going to show an intraday chart here. So this is what you want to look for, guys. When we come in the room every day, what we do is we set the parameters for the day. We set the upper expected move. We set the lower expected move. Look at how the price came down to the lower expected move today. After it printed the opening range, we dropped out of there, came right down to the lower statistical expected move. That's one standard deviation from the opening print. And then what we've seen is the price has rallied up to the upper expected move. But what you want to look for...
That's a microcosm of your bear trap that you just outlined.
Yeah, it happens. That's why it's a fractal. It happens every day. So during corrective markets, we'll see the market rally up early, and then we'll see it dump into the close. And when we're working out of the correction, this is the type of price action that you want to look for. Because what does this do? Everybody gets used to, like Groundhog Day, and they say this move to the downside, and they're like, oh, I'm going to short the crap out of this thing down there. And then they get squeezed to the upside. This is how markets move. It's really the only reason that markets move is because somebody's in pain, right? And it's, when I say somebody, it's a collective somebody, like millions of people are in pain because they just fell for the oldest trick in the book again. So that's how the intraday stuff happens. Like, look for, eventually what we're going to have is we're going to have a day where we start strong and we just blow off to the upside, right?
Yep.
But those days are relatively rare. A lot of times we'll see these, we'll start out weak in the day and everybody throws in the hand, like, oh no, here we go again. And then just like today, we're seeing that's a pretty significant move. I mean, we went 35 and 30. That's almost 100-point move from tip to tail today. I mean, that's pretty big.
Yeah.
We're seeing some really big volatility on relatively light volume. And like Dave said, we're going to see more of the same tomorrow. So even though it's only a half day, it will probably be, I've been surprised. All the days that I thought, wow, this is a half day. This is going to be nothing going on today. There's no events. There's no nothing. And then boom, we get these monsters that come out of nowhere.
I can't count how many times that Friday after Thanksgiving is like that, where you just get that big move on that Friday after Thanksgiving, comes out of nowhere, like a 40, 50 point SPX move.
Right.
Don't be surprised. But this is good action. This is a good continuation from Friday. We probed lower today and got bought back up. That shows that buyers are coming in, or at least the programs are set to buy at those levels and prop it up. Again, that's a good signal for, I think, the rest of the week too. So, and yes, Chalupa Man, Merry Christmas and Happy New Year to you too, sir.
And we have very little going on tomorrow. There's Richmond Fed Manufacturing Index on Tuesday, and then the market's going to close at 1 o'clock Eastern. So. The futures will stay open through Globex on Wednesday, but there's usually very little trading that happens there. And then we'll come back on Thursday and Friday. Thursday's got jobless claims, which still important. And don't forget that the PCE on Friday was really a good report. Was really, so what that shows is that the Fed did not have access to that information on Wednesday.
Right.
They couldn't have, because if they had seen that, they would have been, I think, a little bit less hawkish. So that's the thought, though. But the 10-year note continues to go higher. I haven't looked at it today.
We're over 4.5. We're over 4.5. 5% there, the magic number there. If that thing goes up there, then you've got some bigger issues. But I think we may waffle around in this range for a little bit. But again, a lot of stuff's going to bide its time until Trump comes in office, and then the changes start being made and what they are and how they affect that stuff, right? If it looks like we're going to continue to just print and add debt, that 10 years is probably going to go up more. If it looks like it's going to start to really get a handle on that stuff, then it'll probably pull back some. And then on top of that, obviously the market's going to have to start trading on that. That's why it'd be natural to see that volatility.
So I got a question here from the Hoffman family. Yay. Let me bring this up on the chart. And so he was looking at, and we see this all the time, constantly. Like, this is why we do this. So we chart the opening range, and this is through a Thinkorswim study. So we do that. But then what we do is we get the opening print on the ES, which is the futures contract. And what we do is we come along every day and we look at the options expected move every day. So when we came along this morning, it was, let's see, what was it? 33.72. So the 33.72, what I'll do, like right at the opening bell, what I'll do is I'll go along to and find out what the opening print is on the ES at the bell, and then add and subtract that number, and that forms the one standard deviation. So what we're supposed to see is 68.2% of the time, the price should close within this area. It can go outside, it can go underneath, it can do everything it wants to do, but statistically, it should finish the day within this envelope of the expected move. I'm sure that there's probably a study to draw this. I have resisted trying to automate this to some degree, because what I'd rather do is this keeps me in touch with what's actually happening. And I don't mind doing this manually every day. So I think there's some things that you want to automate, and then some things you want to like, holy smokes, really? It's this big? You don't want to just like inhale the data as if it doesn't matter. So I don't mind drawing that every day because it puts me in touch with what's going on. And you can see, I see this happen all the time. I see this happen where the price will come up and touch one of those expected moves and then immediately reject off there like it's touching a hot stove. And that tells me that we're probably going to see a bounce or a rejection at that level, depending on what's happening with the internals. So let us know if there's any other questions. We're going to be here for just a couple more minutes, and then we'll send you on your way.
One thing we can highlight too is, today we were talking. This looks a little bit. We'll see if we give some back in the end of the day, but this looks a little bit like more of a Mag 7 rally today. Bitcoin not going with it. All the crypto stocks getting beat up pretty good today.
Yeah. So here's the current advancers. So there's a lot of. Like the financials are doing terrible. We have, these are the staples and retailers and, so Meta, Google. So people are buying the Mag 7. They're buying the big performers into the end of the year. That's what they're looking to do. And so that right now the Dow is still down. The NASDAQ is way up. So we can look at these through just the standard index watch right now. So communications is up. That's usually tech. Energy's barely up. Tech is up. We also have healthcare up, and actually the VIX is coming down today. So after a big spike in the VIX, this was one of the highest days that we had on the VIX. Let's see, was the other day. That's one of the biggest percentage spikes that we've ever seen on the VIX. It went from, mid-teenagers up to 28 and change. But so far it's coming back down again. It's reverting back to the mean, which is this 200-day moving average, which is what it should do. It should revert back to the mean. The other thing that we're seeing too is, let's go over here to the volatility. Right now we have an IV percentile of 28. So what that means is that 28% of the days over the last year were actually lower than this, or you could also say 72% might have been higher than this. So right now we're kind of at a break point. This is usually 30 to 33% represents, when we get above that, we represent kind of higher volatility. And a lot of times when we're down in these areas, like where we were in late October, early November, December kind of thing, that's usually around a 10 IV percentile. So we know that that's relatively low. So we got a question here for you, Dave, from Chalupa Man.
Yeah, I think the Russell bounces some. I mean today it was down 20 some handles. It's only down 9 now. So I've got one little trade on there still that I maybe have to manage this Friday. It's within 10 points of where it's at. So I think the Russell does move. The thing that affects the Russell is rates. So, if it looks like there's higher interest rates, that affects the Russell. So it's still shaking off some of that from last week with the Fed, but I think over the next week or two, I think if we get one of those days that Doc said where you just see like the S&P or whatever up 40, 50 handles, I think you see the Russell go up 20, 30 with it. I think we'll make it back to 2,300. That might be tough before the end of the year, but 2280-ish is probably where I could see that thing going to. It's at a good bouncing point. It's come down and kind of really hit. There was a big gap at that 2240 level that it filled now. And so I'd like to see it finish a little higher today, like for then where it's at, maybe down 5 or 6 points. But I think the Russell was kind of bottoming here, and over the next week or two, it'll probably head up some. Especially if we rally into the end of the year overall, it'll go with it.
Do you still
the Dow's been beaten up the most. I think that's starting to look like it. It was down big this morning, and I think it might start to be turned a little bit too.
Yeah, let's look at your weekly bull. So the Dow's perfectly at your weekly Bollingers, and you're trying to find some support there. The Russell, do you still use those weekly Bollingers on the Russell?
I do, and so I use it for all of them. The Russell's a little bit what's the best word? What's the technical term? Wonkier than the others, because it's small caps, so a lot of things can affect the small caps. But it's clearly broken out of a 2-year sideways pattern, and it's pulled back. It's still at a higher low as of today from where it's at. It's close to taking out that prior low, but it's holding that. And that's kind of a good sign, right? And so I wouldn't be surprised to see it bounce some more tomorrow if the market goes higher. I just think it would overall. But it definitely is not going to go like the NASDAQ's going today or any of that stuff, because the Mag 7 is what's driving that. So much more subdued, I would say, the Russell will be.
I'm going to just do a quick view on crypto. Crypto is coming down to a very important support level specific to Bitcoin. Now, what's interesting here is that notice most of the crypto market is actually green today, and one of the few is actually Bitcoin. And I wonder if because there's so many people that have leveraged way too long on Bitcoin. I suspect that. But right now, I just went through a big report today on this, looking at where support was on BTC. And right now, 92 is extremely important support for Bitcoin. If we break that, it's next step down is maybe 88 and below there. Then we're coming all the way down to the 70s. So, but keep in mind that we have a weekly chart which is seriously into exhaustion and deserves another couple of weeks before it's going to be ready to go. And so right now, what's happening in Bitcoin is exactly what needs to be happening for that market to recover from this crazy move that we had recently. So,
yeah, it's definitely. I mean, this is this is the time where you pick up some on these things. So maybe it probes a little bit lower. I could see it going sideways for a little while, but But it's funny how nobody wants to buy it when it drops like a brick, which is the time you should buy it.
The other
So
thing,
like BITO,
the other thing
good
too
pickup
is,
today, being down $2.
yeah, the other thing too is the RSI 14 relative strength is only at 40 right now. So even though this has been a strong move, a lot of times you look back on these moves and it really does key off of relative strength 30 in a bull market. Once it hits that level, that's almost an institutional buy, automated buy level for that. So we may see just a little bit more, and that may end up being an intraday, creating a hammer, something like that. So keep your eyes peeled for that. Okay, guys. All right, we are going to wrap things up here and say thank you for joining us, and I want to wish everybody out there a terrific holiday. Don't forget that tomorrow is a half day of trading, so don't be trading after 1 o'clock, or try to. And then
Yeah, we got 2 weeks in a row of just 1.5 days off in the middle of the week. So, enjoy the time with your families, relax, and, get ready for the new year. Because like I said, I think when we flip to January, it's just going to be a different type of market.
Could be. All right. Thanks, everybody. We'll see you guys next
Thanks, guys.
Monday. All right. Adios. Bye now.